The year is 2025. A shadow falls over the once seamless border between Canada and the United States. The source of the tension? Trade. Specifically, the imposition of tariffs by the United States on Canadian steel and aluminum. These tariffs, a 25% levy on imports, sent shockwaves through the Canadian economy. Canada, long a close economic ally of the United States, responded in kind. Retaliatory tariffs were placed on a range of American goods. The total value, a staggering $30 billion. The message was clear. Canada would not be bullied. This escalating trade war threatened to unravel decades of economic integration. The impact was felt immediately. Businesses on both sides of the border braced for the fallout. The dispute, however, went beyond simple economics. It exposed a growing rift between the two North American neighbors, a sign of shifting geopolitical sands. The economic consequences of the trade war were immediate and far-reaching. Experts warned of a cascade of negative effects. Prices for consumers, both in Canada and the United States, were projected to rise. Supply chains, long calibrated for seamless cross-border trade, faced disruptions. The tariffs, economists argued, would harm the very industries they were intended to protect. The cost of production for manufacturers, dependent on raw materials now subject to tariffs, would increase. This would, in turn, make their products less competitive in the global marketplace. The trade war also threatened to undermine investor confidence. Uncertainty breeds caution, and businesses hesitated to commit to new investments in the face of an unpredictable trade environment. This had a chilling effect on economic growth on both sides of the border. The economic pain, however, was not felt equally. Canada, with its smaller and more trade-dependent economy, was seen as more vulnerable to the negative impacts of the tariffs. This realization spurred a search for alternative trading partners. Faced with growing trade tensions with the United States, Canada embarked on a bold new strategy: diversification. The goal was to reduce its reliance on the American market and forge new economic partnerships. The direction? Eastward, towards the Asia-Pacific region. This pivot to Asia was not entirely new. Canada had long recognized the economic dynamism of the region. However, the trade dispute with the United States added a new sense of urgency to deepening ties with Asian nations. Among these potential partners, one stood out: Japan. A technologically advanced nation with a highly skilled workforce, Japan represented a natural fit for many Canadian exports. Furthermore, Japan's energy needs, particularly its growing appetite for liquefied natural gas, presented a significant opportunity for Canada. This strategic realignment was not simply about finding new markets for Canadian goods. It was about building lasting partnerships based on shared values and a common vision for a more prosperous and interconnected world. The trade dispute with the United States had a profound impact on Canadian public opinion. Canadians, long accustomed to a close relationship with their southern neighbor, felt betrayed by the imposition of tariffs. This sense of betrayal fueled a growing desire for greater economic independence. Public opinion polls painted a clear picture. Canadians overwhelmingly supported the government's efforts to diversify trade. Over 90% of respondents favored reducing dependence on the U.S. market. This sentiment was particularly strong in provinces heavily reliant on exports to the United States. The trade dispute served as a wake-up call. It shattered the illusion of an unbreakable bond and forced Canadians to confront the reality of their economic vulnerability. The message was clear: Canada needed to chart its own course in the world, one less reliant on a single, increasingly unpredictable partner. This shift in public sentiment provided a strong mandate for the government to pursue its diversification strategy. It also signaled to the world that Canada was open for business and eager to forge new partnerships. Section 5. Energy's New Frontier: Canada's LNG Boom. Canada's pivot to Asia was underpinned by a major advantage: its vast energy resources. In particular, Canada's abundant reserves of natural gas, a cleaner-burning alternative to coal, positioned it as a key player in the global LNG market. This was particularly appealing to Japan, a nation seeking to reduce its carbon emissions. To capitalize on this opportunity, Canada embarked on an ambitious plan to develop its LNG export capacity. Major projects representing billions of dollars in investment were launched along Canada's west coast. These projects aim to transform Canada into a leading global supplier of LNG. One such project was LNG Canada, a $40 billion behemoth located in Kitimat, British Columbia. Backed by a consortium of international energy giants including Shell, Mitsubishi, PetroChina, and Kogas, LNG Canada was designed to ship Canadian natural gas to markets in Asia. These LNG projects were more than just economic endeavors. They represented a strategic bet on the future of global energy demand. They also showcased Canada's commitment to environmental sustainability, as many of these projects incorporated innovative technologies to minimize their environmental footprint. Section 6. A Trans-Pacific Partnership: Canada and Japan's growing bond. As Canada looked east, it found a willing partner in Japan. The world's third-largest economy, Japan was eager to secure new sources of energy to power its industrial engine. Canada, with its vast natural gas reserves and commitment to responsible development, was seen as an ideal supplier. The Canada-Japan trade relationship, however, extended far beyond LNG. Japan was already Canada's fourth-largest trading partner, with two-way trade exceeding $36.5 billion annually. Key Canadian exports to Japan included not just energy, but also minerals, agricultural products, and seafood. In return, Japan supplied Canada with automobiles, electronics, and high-tech machinery. This complementary trade relationship, built on mutual benefit and respect, formed the bedrock of the burgeoning partnership between the two nations. This deepening relationship was further strengthened by shared values. Both Canada and Japan were committed to free trade, multilateralism, and the rules-based international order. This shared worldview provided a solid foundation for cooperation on a range of global issues. Section 7. Beyond tariffs, the CPTPP advantage. The strengthening bond between Canada and Japan was further bolstered by the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, or the CPTPP. This landmark trade agreement, encompassing 11 Pacific Rim nations, aimed to reduce tariffs, liberalize trade, and foster economic integration among its members. For Canada and Japan, the CPTPP represented a golden opportunity to deepen their economic ties. The agreement significantly reduced or eliminated tariffs on a wide range of goods traded between the two countries. This made Canadian exports more competitive in the Japanese market and vice versa. The CPTPP went beyond traditional tariff reductions. It included provisions on intellectual property protection, digital trade, labor standards, and environmental sustainability. This comprehensive approach aimed to create a level playing field for businesses and promote sustainable and inclusive economic growth. The agreement served as a powerful signal of Canada and Japan's commitment to free trade and multilateralism. It also provided a framework for deeper economic integration and cooperation between the two nations. Section 8. A future forged in collaboration: Canada and Japan's shared vision. The burgeoning partnership between Canada and Japan extended beyond the traditional realms of trade and energy. Both nations recognized the transformative potential of emerging technologies and sought to collaborate in areas of mutual interest. One such area was electric vehicles. Canada, with its abundant mineral resources essential for EV batteries, and Japan, a global leader in automotive technology, saw an opportunity to collaborate on the development of a sustainable EV supply chain. Another promising area of cooperation was artificial intelligence. Both Canada and Japan were at the forefront of AI research and development. By pooling their resources and expertise, the two nations aimed to harness the power of AI to address societal challenges and drive economic growth. This shared vision of a future shaped by innovation and collaboration cemented the bond between Canada and Japan. It also positioned the two nations as leaders in the global transition to a more sustainable and technologically advanced future. Section 9. A new dawn for global trade lessons from the Pacific Rim. The story of Canada and Japan's deepening partnership is more than just a bilateral tale. It is a testament to the enduring power of free trade, multilateralism, and the pursuit of shared prosperity. It also offers valuable lessons for a world grappling with rising protectionism and geopolitical uncertainty. In an era of shifting alliances and economic nationalism, Canada and Japan chose a different path. They recognized that their destinies were intertwined and that cooperation, not confrontation, was the key to unlocking future prosperity. The CPTPP, a beacon of free trade in an increasingly uncertain world, stands as a testament to their shared vision, It demonstrates that even in the face of adversity, nations can come together to build a more open, interconnected, and prosperous world. The Canada-Japan partnership serves as a model for other nations to emulate. It shows that by embracing collaboration, fostering innovation, and upholding the principles of free trade, we can create a brighter future for all. The Pacific Rim, once a region on the periphery of the global economy, is now at the forefront of a new era of trade, one defined by partnership, sustainability, and shared prosperity.